We think it's a modest impact. We don't think it's going to have a material impact on the bottom line. And remember, Amazon has so many initiatives, so we think this is a great move. Amazon's cheering this move. Other retailers are crying right now over this. So we think that they can, the pros are going to outweigh the cons, and you're going to be able to reallocate resources away from some of these initiatives that Amazon's going up against to fuel this. This is obviously very critical in the holiday season. I think the second point is the other retailers don't have high margin businesses like AWS, the ad business, the subscription business. And in 2 years, these businesses are going to drive over $100 billion of value on revenue and then really strong margins that other retailers simply do not have. So they have this other engine of growth and profitability that can offset moves that they just made. And so bottom line, we think, again, it could have somewhat of a small hit on the bottom line, but we think that most investors have been focused on the 30% plus growth that Amazon's delivering. We continue to believe they can grow over a 20% growth rate the next couple of years.
You bring up some really good points about Amazon's other businesses, of course, and I have to sort of harken back to what happened with Walmart several years ago when they announced that they were increasing their wages over several years, $1 each year for employees. And I think many of us underestimated the impact that actually had on the positive side for sales, for the stores. It seems like, while a little hard to quantify, that the employees were more motivated, they did a better job serving the customers, and same-store sales have only gone up from here. Do you think that there's a possible multiplier effect like that for Amazon that eventually will come to fruition in the stock price, though it's not moving much on this right now?
I mean, we do. We think there's a lot of goodwill that's been built. Obviously, there's been a lot of criticism around how hard the job is for what they're doing in the cost that's associated with it. So we think that this will have a great impact over a period of time. Again, short term, it's hard for us and for any financial analyst to put this into the model and say it's going to have XYZ outcome, because there are so many other businesses that they could effectively let up the investment on. And you've seen that. What Amazon does is they fail fast. When they go into businesses, they get out. I think our biggest criticism of Amazon is they're in too many businesses right now, and so perhaps they have another playbook that we all haven't seen, where they're pulling off to make room for these additional expenses. Bottom line, again, I think focus is on the top line right now among investors. If you look at all the FANG names, this clearly has probably the best margin improvement over the next 3 years. So we're still big fans. We still see a pathway to $3,000 a share in Amazon over the next 2 years.